Good afternoon, everyone, and welcome to Stock Market Today for Monday, March 24th. It's Alissa Coram here, and stocks revving up today in a big way on some softening tariff concerns. And here with me now to discuss today's action and some stocks to watch is my colleague, Justin Nielsen. Justin, what do you have for us today?
Yeah, we can go over a live trade that you did on the IBD Live show this morning, and that's DoorDash. I got in a little bit later, probably at a higher price than you did. We should take a look at Heico. A lot of defense names that were moving today, aerospace defense. So Heico is a good one to look at, and also Boston Scientific, just to round out, get a little bit of everything. In the medical space.
Yeah, we'll check out those stocks. But first, let's take a closer look at the action in the major indexes today. Quite a powerful move in the market. The NASDAQ up almost 2.3% on the day and closing pretty close to session highs. We had the S&P 500 up 1.8%, retaking that 200-day line, a critical level there. The Dow up 1.4% on the day, now above the 200-day line as well, pretty solidly there. And the Russell 2000 up about 2.5%, headed into the final stretch of the day. We know it's been badly beaten, but trying to make a comeback here. So we'll take a closer look first at the NASDAQ composite. This was a powerful move today, Justin.
Yeah, this is exactly what the doctor ordered. I mean, we've been talking about how when you get the low, you want to see a rally, you want to see a confirmation of that. Now, look, volume is one of the components that we're usually looking for, and we've been talking about that. But the truth is, I wasn't expecting us to get volume today in any way, shape, or form, because while we were tracking higher for most of the day, a lot of times at the last few minutes on a triple witching day, you're going to get a big spike in volume, and it's really hard.
Options expire.
Yes, options expire. Yeah. Index options expire. Futures expire. So there's a lot of things that expire, and it doesn't necessarily mean anything. It's just that there's some jostling as those people take get assigned shares. They're taking shares from their option positions or what have you. But there's just a big increase in volume on those days, and so
it's once a quarter.
It's once a quarter, exactly.
4 times a year.
4 times a year there. There are these issues that we get sometimes where rebalancing events, triple witching, and look, even your monthly options expiration does typically see a spike. So it does. It's a little bit of a false sense of volume.
Artificial almost.
It's a little it's more mechanics rather than buying or selling.
Organic.
So we just have to make some adjustments in our mind. But at the end of the day, I mean, what we saw here is we saw a very powerful day. It started strong, ended strong, got to the 21-day moving average line. It cleared a lot of, one of the things I was looking for was, actually a close above last Monday's high. So if you go to I'm sorry, 2 Mondays ago. If you go to 2 Mondays ago, yes, I'm used to saying last Monday, but yeah, now it's 2 Mondays ago. Or was that a Tuesday?
The 7th. We'll just say March 7th.
No, I'm talking about the Monday, next day.
Okay.
So yeah, right there. So
all right.
I was kind of looking at that line.
Yeah, this sideways area is what you're trying to say.
I was looking at that line in the sand, and we poked our head above it a couple times, but we never were able to close above it. So not only did we surpass last Monday's high, we surpassed 2 Mondays ago the high and closed above it for the first time. That also put us back above 18,000. Just a lot of levels that we just knocked out in one foul swoop. And look, I know news is going back and forth. It's worse than Ross and Rachel on Friends. Will they or won't they on the tariffs? But at the end of the day, you have to look at the market reactions to it. Yep. And it really was kind of a very powerful day today. Can't be ignored. Now, does that mean that you have to go from all cash to fully invested on margin? No. You can do some incremental stuff. Because we cleared so many hurdles, it really was kind of, I think you could go in a little bit heavier. but
Mhm.
we still want to get above the 200-day moving average line. We still
Yeah.
want to get above the 50-day moving average line. We'd like to see not only this, the index continue the power, but really kind of remain above 18,000. We want to see it hold here and not
Mhm.
give up these gains, not fill in that gap. If it
Yeah.
does, it's okay, but we might have to back away a little bit. And it should also be noted that, look, you and Mike, made a big deal out of the kind of upside reversal action that we saw on Friday. And there was a reason to be doing buying on that day, just to kind of dip your toe in, with the understanding that, look, if it didn't work, you were putting on a little bit of risk, but you had a clear area where you could get out. Now that we have some strength and some cushion on positions that maybe we took on Friday, well, now you get a little bit more flexibility in terms of how much more aggressive you can be.
Right. Well said, Justin. And while the Nasdaq is not above the 200-day line yet, the S&P 500 now is. So I do think it was notable how strong we closed today, but we have to stay above this level now, right? We want to get above the 200-day and stay above that long-term level. Very critical.
This is a great first step, again, because you cleared all of those hurdles in one foul swoop. But exactly as you said, now can you stay above there? Because if we just have this one day up and then some news items come out later in the week, we could be right back down, and then that would
Mhm.
give us a much more bearish look, because you would think, okay, not only are we going to be heading potentially towards the 5,500 lows, but we could be going down further than that if we lose that area. So yeah, this is going to be a critical week for us to see how
Mhm.
well we hold up.
Absolutely. The Dow above its 200-day line as well, and the 21-day line. So progress there for blue chips. Small caps still badly beaten. But again, not only did we see notable strength today across the board, and especially critical levels that were cleared for the NASDAQ and the S&P 500, it was the stocks underneath the surface. We already started
Yeah.
seeing stocks setting up and triggering potential buy signals last week that are more in our style, in addition to more of the defensive stuff that we had seen in recent weeks. But especially today, a lot more stuff was rocking and rolling in the growth land, and a lot of the beaten down growth, while maybe not in a traditional position to be bought, there was a lot of money flowing.
Yeah, absolutely. I couldn't agree with you more, Allie. I mean, just take a look at, ARK K is a great place to look. That really bounced up above. So it just, we usually look at ARK K as a risk on trade. So a lot of power there, up over 5%. And look, there were a lot of beaten down names in here. And one of the beaten down names that I think attracted a lot of attention today was Tesla. You looked at, you were showing this on IBD Live this morning. If you look at the weekly chart, we had 9 weeks in a row where it was just getting pummeled week after week after week. I mean,
Mhm.
look, it's up over 11% and still 43% off its high. So, let's put it in perspective. But when you have something that is beaten down that so much, coming up off the bottom in such a strong way, I mean, XLY, this is a big percentage there. It's a 12% there. You
Waiting,
look at
yeah.
XLY up 3.7. This was the highest sector gain today of the 11 sector spiders, and it was because of Tesla, because
Mhm.
when you have a heavyweight like that go up that much. But to your point, it wasn't just one area. You look at aerospace defense, ITA. This is a position I have. I believe I either did this or XAR. They're very similar.
And it's on
But
Swing Trader, I
and
believe,
it's on Swing
right?
Trader.
Mhm.
And so, yeah, this, you had a lot of defense
Yes.
plays that were working. GE is one that we've been talking about a lot. We'll talk a little bit about one later. You had your resurgence of the Palantirs and, Spotify's, Netflix, FNGS. So again, there was just a lot of participation
Mhm.
from a lot of different stocks, not just one area. And certainly, to its credit, it wasn't XLP, like with the staples, which we've been kind of looking at and saying, okay, well, if these are where the strength is, and that's exactly where it was for a while,
Mhm.
what does that say about the market? XLU did not have a great day today. That tends to be a little
Great.
bit more defensive. So you
We're
kind of
cool with
saw
that.
that shift. Where's the money going to come from? It's going to be coming from all those areas that were getting the money when people were hiding in the bunkers.
Right, exactly, which is what we were talking about just because we've seen it
Absolutely.
from market history, right?
Yeah.
That rotation. If you're
Mm-hmm.
gonna go from risk off back to risk on, be careful about dabbling in those risk off type areas.
And it was one of the
In those
reasons why we
areas.
kind of say, while a lot of institutional investors, they have to be invested, and so it makes sense for them to
Mhm.
hide in those areas. As
Individual
individual
investors don't. Yeah.
investors, we don't have to. We can hide in cash, and so
Yeah.
then it's just ready to deploy immediately when we see opportunities like what we've seen on
Mhm.
Friday and following up today.
Right, exactly. And we don't know if the change in tone of the market today is going to last. As you mentioned, we'll have to continue to take things day by day. But I love that IBD has that perspective on the market both ways, right? When
Mhm.
you are in a strong market that turns into a choppy market, that turns into a market that rolls over, and how we adjust our portfolios along the way for those situations, and in a situation where we're getting things back into gear. So yeah, we'll have to see what this week brings. Okay, let's quickly take a look at the 10-year treasury yield before we move on to the stocks here. Justin, we did see a little bit of a bump up here today in the 10-year.
Yeah, and so here again, it's kind of that disconnect from what everyone says is, "Oh, strengthen the 10-year yield is bad for stocks." Well,
Not today.
sometimes, but it's not always consistent. Sometimes when you have recession fears, and that's one of the reasons why the yield is coming down as more people are putting money into bonds, you've got something else going on there. And so, yeah, today it's not that correlation. So
Mhm.
at the end of the day, you can look at the 10-year treasury, but if you're trying to trade the market off of this, I think you're in trouble.
Yeah.
You have to look at the market itself and make your decisions based on those reactions.
Right. It definitely comes in handy when you are looking at things like housing related
Mhm.
stocks,
It
or
can help with context. Mhm.
yeah, yeah, or maybe, the small caps, which are a little bit more interest rate sensitive, but
Right.
again, it's not gonna be a day by day, tick by tick,
Yeah.
relationship there.
Mhm.
Okay, let's take a look at some stocks. DoorDash, which you mentioned, and it sounds like we both own it now,
Mhm.
up 4.4% on the day. We were talking about this on IBD Live this morning. Leaderboard also established a position here. And this is a stock that I've been watching for a while. I traded it from last September up until just a couple of weeks ago, but I really love how it overall resisted the downdraft, Justin, got back above the 50-day line. So I took the opportunity today to add some shares.
Yeah, and again, you were being very frank about it and very transparent on IBD Live. You're like, okay, Justin's yapping. I'm gonna take that opportunity to put on a trade. And you also mentioned, which I think is important, the conviction that you have because it is a product that you use. It's something that you have good experience with. So while it's
Absolutely.
nice to see the numbers there, and
Mhm.
remember we have those hashtags on there because this is something that has recently come from negative numbers to positive numbers. So we're doing
Right.
we're doing a comparison to negative numbers, and we're making that adjustment. That's why the hashtag is there. But you
Mhm.
are getting some solid numbers here on the profit column. 38 cents per share. The previous quarter, 33 cents per share. The one before that, and a very consistent revenue growth. So sometimes that revenue growth, the consistency there, gives me a little bit of comfort because I can see, hey, sometimes there's all sorts of reasons that your earnings might be off because you're doing some investments, you're doing some things that are one-offs. But the fact that this has such consistent sales growth is something that really sticks out to me. And not only that, but you had a really good chart to trade off of. As you mentioned,
Exactly.
this came down, but not nearly as bad as most stocks that were in that leadership category,
Yeah.
holding well above the 200-day moving average line,
Mhm.
only spending a few days below the 50-day moving average line, and then just kind of
And those
doodling
bottom
around.
days, some really
Excuse me?
great support, and those bottom days were some really great support days there too.
Support action, absolutely. So, if you were looking for a stock that was holding up well, DoorDash really, fit the
Mhm.
bill in that regard. And so, yeah, then you're looking for your opportunity, whether it's a cross of the recent highs or a downtrend line. you had a few different ways that you could trade this. And if you were wanting to wait for the market to be a little bit more in your favor, well, guess what?
Okay.
We got that today.
Exactly. Yeah. And I love, hey, this isn't a full on base structure yet, right, Justin?
Hmm.
But I love these earlier entries in terms of risk management. If I can have a low that's right near the 50-day line and you get, a stock that's rolling over and undercutting those levels, I know I'm wrong a lot sooner than if
Yeah.
I were to wait for a breakout to new highs. So I
Yeah.
love that about this type of entry.
And a lot of times what that allows you to do is it allows you to get a foothold in a position, get some cushion. And if it does
Yeah.
break out above that 215, you can always add
Right.
and have even more money into a winning stock. But
Mhm.
you have that lower average cost that really
Right.
helps you out. So I couldn't agree with you more. And Allie, you've had a lot of success on some of these moves above the 50-day moving average line. And so it's
Yeah.
one of those things where you want to keep on doing what's working. And so
Right.
I applaud that.
Yeah. Well, we're all doing a great job here on the team, if I do say so myself. So we're having a good time when the market's
Right,
looking
exactly.
good. It's a lot of fun, but also I think in terms of our risk management in pullbacks too.
Yes.
We were able to have this maybe aggressive but just alert mindset on a change in tone like today, maybe even some subtle signs that we saw last week, because we weren't just so worried mentally about losing money by stocks that we were just holding and holding and holding when growth stocks got hurt really bad
Mhm.
a couple weeks ago. So
Yeah.
good
Absolutely.
stuff
And
there.
at the end of the day, if you were, I think I was selling some of this myself when it crossed either the 21-day moving average line
Mhm.
and then maybe selling the remainder when it crossed the 50-day. So am I buying it at a higher price? Sure, but I didn't know that it was going to hold so well. And
Right.
so it's one
It
of
could
those
have
things where
broken. Yeah.
it could have gotten worse, but it didn't. And so,
Mhm.
yeah, I'm just reestablishing the position that I had,
Yeah.
sure, at a higher price, but I made gains on it before. I'm feeling like I could
Mhm.
do it again.
Yeah, I mean, and that's what active trading is all about. We're managing risk and looking at these different signals on the chart, coupled with the fundamental aspects and the conviction, knowing the story. I think that that's a good recipe there. Okay, let's go to BSX. This is Boston Scientific, retaking the 50-day line today, up 2% here. And I believe it even has it's only Monday, but it has a blue dot on the weekly chart there, and the stock is still 4% below prior highs. So that's really underscoring the stock's strength versus the S&P 500.
Yeah, it's another stock that held up very well. On the weekly chart here, you can
Mhm.
see that it basically got support at its previous base, came right down to that level, got support. Yes, it spent some time underneath the 10-week moving average line and the 50-day moving average line, but really not in a big way. It just,
Mhm.
again, compared to what happened to a lot of stocks and the indexes themselves that are still,
Right.
right around their 200-day moving average lines, the fact that this held up so well is what really caused that relative strength to soar. And so even though this is still in a base, you're getting that blue dot because it's already with a relative strength at new highs before you've even hit that higher price. And so in a very similar way, we've got something that's crossing above the 50-day moving average line, it's crossing above a downtrend line, and it's got some room before it hits that ultimate high at 107.17. But you've got a chance here to get some shares at a lower price, and you can always add to it if it gets
Mhm.
up to that that traditional breakout. But yeah, I think that
Right.
there's nothing wrong with starting a position in here, and
Mhm.
it's also, this is a little bit of a lower ATR stock too.
Mm.
So if you're finding yourself getting into some of these high octane names, you've got Boston Scientific here that it's two and change. 2.86. So it's below 3. This is definitely much lower on the ATR side as opposed to, I think DoorDash was like 5, 5 and change. And remember that ATR is the average true range, which just takes an average of the last 21 days in terms of how much it tends to move from the high to the low, or even with gaps
Yeah.
from the previous day's close. How much is it moving? And so DoorDash moves a lot more. Boston Scientific about almost half as much. So that can be a little bit easier to manage risk. You certainly want to be careful of not getting too many high octane names,
Right.
or leveraged ETFs,
Yeah.
leverage stock specific ETFs. There's so many ways where you can kind of get that extra exposure very quickly and easily with high ATRs. Sometimes it's nice to balance them out with a little bit of a calmer one. And
Mhm.
look, Boston Scientific, even though it has a lot of those blue shaded areas for tight areas, overall, you look at how this is held above its 10-week moving average line. It dips below it for a little bit, doesn't really do much damage, and then it's back off to the races and new highs. So that's one of the things, that they have a continual pipeline of products that they're coming out with, very innovative things. And
Mhm.
yeah,
Yeah.
it's a nice setup here, and a way to get, if a lot of these older leaders come back, tech space, this is a way to get a little diversification.
Yeah, a strong and steady stock and showing acceleration as well on both the top and bottom lines. So checks off a lot of boxes here. Okay, Justin, you mentioned aerospace and defense as an area of strength. So let's round things out with a check back in on HEI. This is Heico clearing an early entry within a handle of a cup
Right.
with handle base up 2.4% today.
Yeah. So today is the day of early entries. Yes, you can wait for that 270. It's 3 points away. It's not going to make that much of a difference. But today it was looking actionable as it crossed that downtrend, crossed kind of the highs of the previous few days. And so yeah, this was actionable. And not only did you have good action here on Heico, but you've
Right.
been
Pull through.
having this strong action. We've been cycling through GE, Heico, Howmet. And I do have a position in GE myself. The ETFs, the ITA, XAR, they're all looking very strong. And so you've got a group that
Yeah.
throughout this correction in the market has had strong relative strength, and the fact that it's still participating,
Mhm.
that gives you a little extra, and that's why I wanted to own at least something in this space.
Right. That makes a lot of sense. All right, Justin. Well, I think in terms of what we need to be thinking for the rest of the week, we have the areas that we want to see the indexes hold, and we want to see these stocks that are looking interesting today. We want to see them. I'm getting a phone call. We want to see them continue to hold up, right? We want these entries to work, and we want these stocks to make progress. But we have to be very careful with the NASDAQ still below the 200-day line. If it gets rejected there, that is not something we want to see. And we want to see the S&P 500 hold that level.
Absolutely. That's what it's all about. I want to get Mel Gibson, all in painted face, with his kilt on, saying, hold, because that's really what we need to do.
There we
And
go.
and look, if we go forward here, I'm not gonna hate that, but we definitely don't want to go back.
Yes, absolutely. And Justin, we will miss you this week on the podcast on Wednesday. Scott and I were going to do our best to cover for you, but we hope you enjoy your vacation this week. We'll miss you.
Yep, I will be in Washington D.C. So if you're at the the cherry blossoms,
That
or
time of
any of the
year,
museums, we're going to be trying to hit them all. So
beautiful time of year. That'll be
yeah,
fun.
yeah.
Enjoy. All right.
And
Well,
thank you
thanks,
for covering.
Justin. Oh, yeah, you bet. We'll do our best. No, it's going to be a good show. Scott and I just prepped a little earlier, so we've got some good stuff that we're going to talk about. We're looking forward to it. So join us live at 5 p.m. Eastern on Wednesday for our weekly Investing with IBD podcast. We'll see you there, everyone. Also, we'll see you tomorrow morning on IBD Live. The team should have some interesting things to discuss, no matter what direction the market is headed and how stocks are looking. It's a critical time. So make sure you tune in investors.com/IBD Live for all the details starting 10 minutes before the opening bell. We'll see you there. And then we'll also see you right back here tomorrow after the close.